guys, welcome back to a brand new video. I'm RexFinance, and today we're going to be talking about 3 stocks that would thrive in this recession that we're in currently. Now, this week has been absolutely crazy. I didn't think I'd hit 4,000 subscribers until this weekend, but I hit 4,000 subscribers on Wednesday, and we're closer to 4.2 thousand subscribers than we are to 4,000 subscribers even. So this entire week has been crazy with all you guys' support, so I really appreciate it. Now, you might be wondering, what the heck is on my head? This is what you call a fedora. My headwear has been a major talking point on this YouTube channel. I began recording with a ball cap because it had been a while since I had a haircut, and Neil did not like it. As you can see, he left a comment. So then, after I got a haircut, I switched to no ball cap, and people liked it. However, my girlfriend Bailey, as you can see in this comment, has demanded that I record a video in my fedora hat. So, if you guys like my fedora hat, let me know down in the comment section, because I respond to every single comment everybody leaves. So before we get into this video, I just want to say, if you are new or returning and have not yet subscribed, to hit that subscribe button before you miss out on this awesome road to 5,000 subscribers. In addition to that, if you clicked on this video, chances are you'll like my 2 other videos. One of them's my top 3 stock picks for May, and the other's my top 3 safe dividend stocks for all of 2020 in this recession. So there will be links to those 2 videos in the description down below if they interest you whatsoever. So that is enough rambling. Let's get into this video. Let's get into what you guys came here for. So for this video, I picked non-obvious stocks. Now, non-obvious means I didn't pick the obvious Walmarts, Costco's, Amazons. Everybody knows those types of businesses are thriving in this environment. It's no secret. So I really tried to dig deep and find some awesome stocks for everybody that's watching my videos, and I really hope you guys enjoy this. As you may have guessed, most of these companies are online businesses, because online retail, online sales, everything online is just going to thrive, in my opinion, after this recession, because people are going to be scared to leave their homes. So, stock number 1 is Revolve Group. I actually have done an entire video on this company. Go check that out. There will be a card right there you can click on. But because of that, I won't be going into too much detail on the company. If you want to learn more about the company, hit that card and watch that video. But I'll just be going over the base business and everything new we learned from the earnings report that was released on Wednesday. So as you can see to my left, I have Revolve Group pulled up on Robinhood. I have a measly 100 shares in this company. I wish I bought more, to be honest with you. But I have also seen a 16% return on this investment, so that's nothing to complain about. And recently, this company actually retook that 1 billion market cap threshold, so that's also a big deal. Their management team all took salaries of $1 for all of 2020 because of this recession. Companies that have management teams that really care about their business and the investors do stuff like that. That's stuff I like to look for in my investments. If the management team truly cares about the investors, they'll drop their salary either completely or to $1, because that's legally what you have to do to drop your salary. So if we move to the 1-week chart now up on my left, they actually beat earnings by a pretty good margin. Now, if you watched my entire video on Revolve Group, I actually predicted they'd beat earnings and revenues, and they did both. So if you invested in this company when I recommended it first, you guys would have received pretty good return. And I know several of you invested in this company because I introduced it to you. So that's kind of an honor. So if you guys made some money on this play, let me know in the comment section down below. So in addition to the earnings beat, what's even more important is that their net sales grew by 6% even through this recession, and they still maintained positive net income with little to no debt on the balance sheet, minus the $30 million they drew down on their credit revolver. So all major important metrics for growth in Revolve Group were positive in this earnings report, which was really big, which is why you've seen this stock skyrocket 38% in a week. Now, I believe this stock has plenty of room to go. This stock deserves to be a $40 stock plus, and I'm not going to sell until it is at that threshold. In addition to all that, they have increased their cash on their balance sheet by $38.2 million, and that's big because you never know how bad this recession could get when they're going to need that cash. All that stuff, which is also why I love they dropped all their management salaries. So here on Stocktwits, I have to give Credit to Thick Onion, quite the name. If you guys don't have a Stocktwits account, I'll leave a link to this website down in the description as well. It's basically Twitter for stocks. Easy way to stay caught up on the markets. Easy way to stay caught up on certain stocks as well. But as you can see, they pointed this out. Revolve Group is actually selling face masks. Why not? Revolve Group does it all. And they're sold out. You can only pre-order these things and they're sold out. Incredible. Becky's will buy anything, boys. And, I mean, they got some variety with the face masks, which is also good. And they're also sold out, by the way. So, they're making money on all sorts of things right now, which I really, really like. They also came out in this earnings report and said that their Q2 numbers have been improving from Q1 numbers, and we had an extremely positive report for Q1, so Q2 is probably going to be even better. So I can't wait to listen to their Q2 earnings call. So that's enough of Revolve Group. My next stock is actually a group of stocks, the tanker stocks. My two favorite tanker stocks are NAT, Nordic American Tankers, and FRO, Frontline. NAT stock is less risky because it has way less debt on their balance sheet. However, FRO has a better opportunity for massive gain, but it is also more risky. However, the dividend yield on FRO, is 23% compared to NAT's measly 5%. In addition to that, FRO's payout ratio is 10%. This means they're only paying out 10% of their revenues on dividends, and the yield is already at 23%, 22, 23%. That's insane. So you may be wondering, why do I like tanker stocks? Well, the oil oversupply problem is not a short-term problem by any means. It's going to take several years to solve this problem. In addition to that, oil producers aren't stopping pumping oil because they need to make money somehow, and they can't make money if they halt all of their drills. So, in addition to the current oversupply, you also have producers still producing the oil, which is adding to the oversupply. And all of this oil needs somewhere to go, so they're paying these tankers to store their oil, and they're paying a premium for this. In addition to that, if we see a second wave of the virus like is predicted in the fall, it can only really help these two tanker stocks. Also, each of these two dividends will be increased drastically over the coming months because of the demand for these tankers. Both these companies have earnings coming up. FRO Frontline is on May 29th, and NAT Stock, Nordic American Tankers, reports next Monday on the 18th. So those are 2 days to keep in mind. Once again, FRO's payout ratio is ridiculous, 22, 23%, and their payout ratio is only 10%, which means they have plenty of room to grow that. Also, NAT's dividend is only 5%, but they will grow that drastically as well. And their payout ratio is a little difficult to calculate, so I'm just going to leave that out of the video. So that is all for stock number 2, or the multiple stocks, I guess. The next wave of stocks, yes, once again, this is not an individual stock, but my third stock pick is a group of stocks in the subscription business model sector. So you may be asking, why the subscription business model? Well, that answer is actually pretty simple, because subscription business models are focused on audience retention over audience acquisition, meaning they're focused on retaining or keeping their already subscribers, the people that have already subscribed to their service, over them trying to acquire new consumers for their subscription service. So that type of thing is just built for a situation like this. So let's get into the first stock I really like in the subscription sector. This is one I've also talked about previously in my top 3 stocks for May 2020 edition. So this stock is Sirius XM. This stock is trading at a ridiculous discount to what I believe it should be priced at. I believe this is a $7, $8, $9, $10 stock in the next 2 years easily. So if you buy in now, I mean, you're going to double your money potentially in 2 or 3 years, which is ridiculous. So the reason I believe Sirius XM's company is so strong is because their average subscriber to their Sirius XM business earns $120,000 per year. So if you're earning six figures and well above six figures, you're probably not going to be worried about canceling your $10 a month, $15 a month subscription to Sirius XM, which you still are using because they have an online platform, and you're probably still using it if you're a trucker and driving trucks. That's part of their big audience. On top of that, their Pandora business, which they fully own now, continues to add subscribers. It's the same thing. Subscription business models make it hard for subscribers to cancel their subscription because they can just offer them a cheaper subscription and convince them to stay with their service, and they're still going to make money off these consumers. In addition to that, Sirius XM also holds a minority stake in SoundCloud, and then SoundCloud's going to absolutely blow up over the next 5-10 years, guys. It's going to be unbelievable. I truly believe Sirius XM is going to buy them outright in the coming year or so, and it's going to absolutely explode Sirius XM's stock price, in my opinion. This is all my opinion. I am not a financial advisor by any means. So my next stock that I like in the subscription business model sector is Stitch Fix. I've also talked about this company in the 3 stock picks for May video, and if you invested when I recommended this stock, you have also seen at least a 20% increase in your investment. I recommended buying this stock as it hit below $16 a share price levels, and as you can see, it's absolutely skyrocketed over the past 2 or 3 weeks since I recommended it. So I hope some of you guys made some money off this one. But I also believe this stock has plenty of room to grow, just like Revolve does. I believe this stock should be valued right at $30 currently, so it's undervalued in my opinion. So Stitch Fix is a clothing subscription business. I really like this because e-commerce is the future. It's the next wave. Malls are currently closed. Most malls are closed, and the ones that are starting to reopen, people are going to be in fear to even shop at these malls. So they have to go somewhere to shop for their clothes. This is where Stitch Fix can really step in and fill that need from consumers. Because Stitch Fix is very personalized. They allow you to personalize your purchase, personalize your clothes, make sure they fit you and you exactly. You can purchase them on demand. And like I said, these people that need clothes that aren't able to shop at malls are running to online retail. And Stitch Fix, I'm sure, has capitalized on this issue. So in closing, thank you guys so much for watching. You could have watched Andre Jick, Jeremy from Financial Education, Graham Stephan, the list goes on and on and on. But you chose to spend your time watching my channel, and I really appreciate that. If you guys enjoyed this video, leave a like down below. If you guys are interested in this video here, it's on me talking about investing in future space tourism. And also feel free to check out this video right here, which is my #1 speculative play for the next 2 years. I think you guys would love those videos. Go check them out. And I'll be back on Monday. I don't upload on weekends, so have a great weekend, everybody, and I'll see you guys then.